Hi everyone, welcome to Pbolic Notes. My name is Michael Kirkchain, and today is Friday 13th, Friday, May the 13th, 2022. Welcome to my channel. This was a pretty catastrophic week in this entire crypto space. It was really massively bearish. Terra Luna in the USD completely blew up. Unfortunately, it's a token that I actually held. Luna had bought at approximately $80, and I had a small investment in the project. I thought that it was a great project. So again, this space is very tricky. You can lose everything you invest. So do your own research, as we always say. But Terra Luna completely blew up. And I will share with you the screen quickly to see the chart for those who haven't paid attention this week. And today we'll also discuss a couple of different things. Again, the macro with what's going on with the Nasdaq and the S&P, looking at the US dollar again. I like looking at also what's going on with the PMI, because that's a good indicator about the economy in general in the United States. Also, of course, Bitcoin and Ethereum, they're still very bearish, and I'll share with you my opinion today. So before I get started, of course, very important to realize that this is not financial advice. I'm not a financial advisor. I'm just sharing with you what I know about the space, and do your own research. Let's get started and look at the screen quickly. First things first, let's look at what I was talking about with what's going on with that project that we discussed on Terra Luna. So Luna was a very famous layer one protocol. Actually, I mean, it was they had a lot of hype around it. They have a lot of dApps running on it. And if you look at what happened to it, basically this week, all of a sudden, it completely tanked, completely crashed. And all of a sudden, whether manipulated or not, I won't get into it. But basically what happened to this token is that it's no longer there. And if you look at the daily chart, it was really something that no one really has seen in the crypto space, where a token that had such a massive market cap completely to disappear from the entire ecosystem. So basically, on April 6th, the price was at $114, and then it was hovering to $78 and so forth. All of a sudden, afterwards, that was it. So from a price point of early May of May the 2nd, around $83. And here we are 11 days later, and it is gone, completely gone. It's at zero, really. So that's done. So just sharing that, and that's it. So let me look at quickly some indicators on the macro stuff. So one thing I like looking at is that this indicator, which is the leading economic index of the United States, I'm seeing this what it is that what the tracker, it says that is that as of March it was 133.07, and what this is for the United States, it's a composite of coincident indexes for each of the 50 states, and these coincident indexes combine several indicators to summarize current economic conditions in a single statistics. So they're looking at non-farm payroll, employment, average hours worked in manufacturing, unemployment rate, wage and salary disbursements, deflated by the consumer price index. The trend for each state index is set at the trend of its GDP. So if you look at this, it really is, it's still not showing any kind of correction. So meaning that it's almost like as if they're not at the correction stage yet. And they should be, because the entire market is being corrected. And so this tells me that it's almost like as if what's going to be coming when these numbers start going lower, like the way it was with what happened with during the pandemic 2 years ago, during COVID. If it starts going lower, then all of a sudden this will have a very negative impact on the entire ecosystem, on the entire stock market, the S&P, and so forth. So that's why me seeing this, it's a bit of a red flag. The second thing I like looking at, of course, is the ISM Purchasing Managers Index. And this one is, if I look at this, let's say the 1 year bar charts, it shows us that basically, generally the way this number goes is that if it's above the 50 mark, it's good. Below the 50, it's not good. If it's in the past, if it's been around 47, it's been kind of coincidental with the recessions. So anything at 47 and below is not good. But if you look at what's going on here, is that in October of last year, it was at above 60 in November, and December, it would start going below 60. And then all of a sudden, and it's been steadily going down since basically last couple of months. It's January. So January was here, February, March, April. So that's why seeing this, it means that really the economy on the broad scale, the economy is not doing that great on a month-to-month basis. So meaning that this is definitely a bearish indicator. Another indicator that I like looking at a lot is the US dollar, the DXY. The DXY today is at above $103. It's right now hovering around 104. It hasn't been this high really since December 2002. So really, so imagine, so all the past 20 years, it's never been this high. And obviously, whenever I see the US dollar getting stronger, it just means that more money is going into US dollar as a stability. So people are getting scared from assets, getting scared from the economy as a whole. So that means that we are definitely a risk-off environment. The S&P and the Nasdaq. The S&P, of course, it's been very brutal. Really, if you look at the way it's been behaving the last couple of months, it's on a bearish cycle. Over here, it's below the 100-week moving average already. So, and last two cycles, it went all the way down to the 200-week moving average. So if that happens again this time, then that could be an easy drop of another 10-15% from where it's at right now. So that's why I'm paying close attention to this, because seeing it in a down cycle and seeing it, of course, in this kind of negative macro environment, I'm paying close attention to this. I like also looking at the Nasdaq, because Nasdaq has this high correlation with Bitcoin for some reason, and the reason why I like seeing that is to see if Nasdaq is doing bad. It's not great for Bitcoin. And if I look at the way Nasdaq's behaving right now, as you see, it's definitely very bearish. Again, coincidentally, since it's got a very high correlation with the S&P, basically not S&P being very negative, Nasdaq also is in bearish market territory. And here we are. It's well below its 100-week moving average, and it looks like it's heading easily towards the 200-week moving average. And I wouldn't be surprised if it gets there, just because of the fact that we're on this bearish market. And really, if you look at the last couple of times that we were in similar situations with the Nasdaq, I mean, really, it looks like once it goes below the 100-week moving average, then there's a very high probability that it's going to go hit the 200-week moving average as well. So that's why it's almost inevitable. But obviously, this is not financial advice. Just sharing with you my opinion. So I wouldn't be surprised if it goes to this level of around 10,000 points in the next couple of weeks, couple of months. Now let's go look at our space, the total crypto space. The total crypto space, of course, it's definitely very bearish. I'm seeing a head and shoulder formation here, and the second shoulder has been broken. So meaning that we have definitely completed the head and shoulder. And the way I would see this is that if we measure what the height is for this from this head to here, then if you come here, generally there's a very high probability that we're going to be hitting this range. So meaning that currently the total crypto market cap is at around something in the range of 1.27 trillion, and it still has ways to go. I wouldn't be surprised if it goes to down by another 10-50% down to the $1 trillion mark. Of course, if there's a lot of selling pressure, if there's any more major tokens like the way Luna exploded, if there's any other major tokens crashing as well, then we can't be surprised if this total crypto market space actually goes even lower. I mean, why would it not go to the 200-week moving average, right? It might. So that's why we got to pay attention to it. We got to be really wary, and anything we invest in right now has to be for the long term. Don't do any, unless if you're a trader. Of course, traders, they're in and out every day. But if you're really buying to hold, like the way I invest, then make sure you invest in projects that you have total confidence in for the long term. Bitcoin dominance is right now hovering at, again, it looks like it's on an uptick. Really, I mean, Bitcoin dominance, by it going up, it means that either Bitcoin's price is going up, which is not, or it means that the altcoins are going down. So which is the kind of environment we're in right now. So as the altcoins are going down, then Bitcoin dominance by itself is already going up. So it looks like we are definitely in a situation where Bitcoin dominance will be going up. And if I compare this to what's going on with the Ethereum dominance is kind of it's kind of been going down really since April. So that's why it kind of makes sense. So meaning that I guess even though ETH is still a blue chip token, it's relative to Bitcoin. That means that it's been behaving a bit worse since April. So that's why those are the two tokens I'm really going to be focusing on today. If I look at really what is Ethereum USD doing, so Ethereum USD, which is this chart here on a weekly chart, it looks like I'm seeing a head and shoulders as well. So this one again, it's bearish, and if I look at what it might do, Ethereum may go down to something down to the range of the 200-week moving average. Okay, so just based on this head and shoulders pattern, this isn't financial advice. It may not do this, but it might. If it does, let's not get shocked. Let's not get surprised. Currently, we're at around the $2,000 mark, meaning that we shouldn't be surprised if it goes as low as $1,000. So let's see what happens. We're paying close attention to this. And then if I look at what Bitcoin is doing, obviously it's well below its 20-week SMA and 21-week EMA, and it looks like it's breaking this very important support line, which is at around $30,000. So if Bitcoin breaks this, which it has, then chances are that it may have some rallies, of course, but because nothing really goes straight down. It may have some rallies, some full rallies, and so forth. But there's a very high possibility that if you go at this chart and look at how it goes, let's say all the way since the beginning, we see that around this $20,000 mark is a very important support line for Bitcoin. So meaning that currently we are here, and I wouldn't be surprised if eventually Bitcoin doesn't move either this way to hit this line, this support line around $20,000, or this may obviously go much longer and have massive cycles. But at the end, I'm kind of thinking that there's a very high possibility that we may hit this $20,000 mark. Again, not financial advice. We're just looking at the situation. Just looking at what's going on with Bitcoin, and I'm paying attention to, of course, all the time to the volume as well, because I need to see for this thing to be having any kind of important move. We have to see volumes like the way we've seen in past cycles, where you see all of a sudden a big red like this one here, this one here, this one here, to indicate that we are at the capitulation stage. So as of today, we're not really at the same level as the past. So that's why this red, in order for it to be really capitulation, we would have it to be really go at this. The volume has to be going at the same level as these two volumes. So let's see how this plays out. We're still smack in the middle of this, and I will update you in the next couple of days as things change in this beautiful cryptocurrency space. So before I hang up, don't forget to subscribe, like this video, and I look forward to sharing with you more charts in the next couple of days. Thank you so much for watching, everyone.